Recording now. All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for March 10th, 2025. We are recording this at our new regular time of 7 p.m. Eastern Time, and this is episode number 469. So my name is David Kosmeter. I'm the creator of Timing Research, and you should be seeing my charts right now, but we'll switch that and show some other people's charts as well throughout the episode. So tonight I have arranged for Norman Hallett, Harry Boxer, and John Thomas to join us as today's expert panel. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks, David, and welcome everybody here tonight. We've got three fantastic speakers here, so we're going to get to it. Obviously, we've had a pretty ugly day today. And so we will talk about it and we'll talk about where things might be going, where the puck might be going. To get started, you guys, we have Norm Hallett, we've got Harry Boxer, and we got John Thomas. So you'll know who the voices are who are talking to you. And then at the end of the broadcast, I'll explain how you could get a hold of them and they could help you with your trading. Let's start out, guys, with what's going on right now. Norm, you got the market right on his butt here, going home on a Monday. Will there be a turnaround Tuesday, or that's a little too much to ask, or what do you think?
This is such an extreme day that I would expect some sort of a chop tomorrow. If it starts out a little bit high, it looks like it's already starting to chop in the just in the last couple of hours when the market reopened in the last hour. But when you see a drop like this, usually you will get that kind of a chop. But when there's a low that's established over the next couple of days, whether it's today or during the chop, that'll be the low that will be the critical point in time where if we break that, then we've got some issues that may last months. If this is one of those flash crashes, we should know, by this time next week or maybe Tuesday of next week. But it was an extraordinary day today, and I hope that if you're not an experienced trader, that you consult with one to try to keep your head straight and decide whether this is an opportunity or a chance to protect yourself a bit. So I'm really excited to be here with Harry and John, very experienced guys, and of course you and the option professor. So I'm almost just as excited as a lot of people, I'm sure, listening to hear you guys' opinions.
Yeah. With regards to the aftermarket here, we're still running down as far as I can see in the futures, but it isn't collapsing or anything like that.
No,
Harry, I ran out of moving averages for the market to stop at, so I'd love to hear where you think it might stop because I ran out of indicators to.
well, okay. I do a combination of regular bar charting, Elliott wave, and Fibonacci retracements and things of that nature. So,
Sure.
what I'm seeing here is a definitive break of number one, the trend line, number two, the 200-day moving average. The 50 has been broken a couple of weeks ago. Okay, but if you look at that chart that you have up, take a look where the RSI is. Right at the bottom, in the same place it was in August when we bottomed there. Also, the same place it was the prior low. So this is I think, a trading opportunity. Now the question is, when we get a bounce, is it going up to that low that we just had, 5,800, and the gap back in October? Are we gonna basically run up into resistance, roll over, and go lower? That's very possible. This could be just leg one of of an intermediate bear phase. That's what I'm thinking. But at the same time, the next up phase, I have friends of mine that are very accomplished Elliott wave analysts who think we go back up to the high, maybe make one more higher high. I don't think so, but I don't know. And
Yeah, you never
I'm
know.
not. I don't. Here's my philosophy: trade what you see, not what you think. I don't want to start thinking about where the market could go. I let the market tell me every day. I'm a
Yeah,
day trader and a swing
yeah,
trader, and I can
yeah.
tell you that today we had two biotech stocks. One was up more than 100%. One was up more than 50%, and we caught them right in the morning when they broke out. And so I don't really care where the market goes as much as I would look. You want to be on the right side of the market. You like to be going with the same trend the market's in. But every day there's a dozen stocks that are going up 10, 20, 50% every day, no matter how bad the market is. So I'm not as concerned, but because my traders and my subscribers are, I'm always timing the market for them. And today I gave them a possible buy signal at the low today. I felt like if you look at the RSI, for example, at an extreme and the same level, like I said, that we had the last two market lows. So are we going to get a bounce? Most certainly. The question is it immediately going to be stopped at about 57, 75, 5,800 and then roll over and make a lower low? Well, I have my next target, believe it or not, is about 54 and a quarter, maybe 5,400. And if that doesn't hold, we could go back down to the last August lows down around 5,200. I don't know where the market's going, but I can tell you right now, this is not a healthy market. It's dangerous. But you're also seeing some signs of a climax. Look at the volume today. Not as big as it was necessarily at the lows, but actually, yeah, take another look at it. In August, the volume was almost the same as where it is now. As a matter of fact, now may even be a little heavier. So I think we're in a climax area. But quite frankly, when I see an important market low, the tick is usually about minus 13 to 1500. We didn't get more than 1250 today. Not necessarily, deep enough, or it could be. So again, let's let the market tell us what to do and where the market's going. But we're getting to a point where we're at an extreme short-term basis only, and then we'll see what the next leg, if this is a five-wave decline and this is only leg one, then leg two should get us to 5,800, give or take 20 points, and then we'll see where the market goes. I don't like moving averages rolling over. I don't like the fact we're below 50. Even we were not below the 50, even at the August low. I mean, excuse me, the 200. You can see that we're below the 200. We were not at the last two lows anywhere, below the 200-day moving averages. So I'm of the opinion you need to wait here. But today was a technical breakdown, and it could lead to much more exacerbated average. The market always goes further than you think it's going to go, and that goes up and down. So I'll let the market tell us what to do. But right now, it's quite tentative, but a little bit short-term oversold. Enough for a rally.
Under any circumstances, on a longer term basis, could you see it going and revisiting the 4,800 level, which was the highs of 2022?
Well, can you expand your chart a little?
Because that would be a 21% drop peak to trough, which is not the end of the world.
No,
And
the
it's
other one.
it's a logical place to go revisit if it's really going to have an unwind.
2, 3, 4. Also notice one thing in LA wave terms from the November low, it was a perfect 1, 2, 3, 4, 5 wave advance, and then the rollover. So what's to prevent at least a 3-wave corrective? That's what I'm thinking. So we'll find out. But yeah, the market could go down to 4,800, can go back down and test 4,500, even lower than that.
Yeah.
But that's bear market territory. You're talking 50%.
All right, John, you are generally one of the great bulls of the 20th century, and I know that you probably are, at least having some respect for the pullback, but you probably are not throwing the baby out with the bathwater. What's your feeling here?
Well, I have a unique investment strategy. I'm bullish in when markets are going up, and I'm bearish when markets are going down. I just haven't had much opportunity to be the latter for
Right.
the last 15 years.
Right, exactly.
But for me, the bull case is down 20%, and the bearish case is down 50%. I think we're in recession now.
Yes.
And the question is, can we get out of this in 2 quarters? Like, for example, if Trump ends the trade war, or does he escalate the trade wars and then put us into a Great Depression? And that's where I'm looking at a 50% drawdown. And we've already seen 50% drawdowns in single stocks like Tesla, for example.
Easy.
So we started advising our clients really at the beginning of the year to take profits wherever you can, raise cash, go into 90-day T-bills. We became much more aggressive at the market high a month ago, and then we started recommending bear ETFs like the SH and the SDS. So the people who got those just made absolute killings. Uh, and we're going to continue with that. I think any rally you get is short term, couple of days, week at the most.
Right.
And I'll tell you what one of my clients told me this afternoon, and that's that there's not a single client he has that isn't trying to get out in the next rally.
Yeah. Which
So,
might mean you don't get one, right?
well, the rally may be the 45 points that the Dow is up right now in Singapore. That might be the only rally you get.
Now, there's
In
a stock that you made a lot of money on, and you were a big proponent on when it was like in the 300s, even lower, and that is Goldman Sachs. Now, that went up to like $600, didn't it?
It did, and we kept piling on the call spreads every month. We made
Yeah,
fortunes. We
yeah,
made fortunes in the leaps.
that was a good one.
We
But my
made a ton
question
of
is
money.
if we're going to have deregulation, if we're going to have mergers and acquisitions in the second half of the year going into 26, is there a price where you think JP Morgan, you could step back in front of it? Or would you
Well, the
just wait
problem
and look?
word that you use there is if.
Yeah, right, right,
So far we've seen no deregulation.
right,
The
right.
confirmation that Trump is going to continue with the Biden era M&A policy. So
Yeah, they
that
did. I saw that on Bloomberg. Yeah, he's
so that
continuing
kills
that
off
policy.
half
Yeah,
of the bull case on the banks right there. And you got to ask yourself what is more important, a future Trump policy, promise, or uh, the fact that we're going into recession now. And I
yeah,
think
yeah,
traders will take the recession call much more seriously than any future Trumps that we may get from a former real estate developer.
yeah.
So,
We had a slowdown that was trotting in the fourth quarter of last year, and now it's turned into obviously a full gallop here in the first quarter of this year.
well, what we are setting up for a Great Depression, and let me tell you why. For the last 90 years, the economic policy of the United States has been Keynesianism, where during times of economic growth, the government runs surpluses, and during recessions, we run big deficits. What Trump is talking about doing is reducing the deficits by the most in history at a time when the economy is collapsing. You add those two together, it gets you falling sales in uh, listed companies while the multiples are also contracting.
Right.
So, all of a sudden 50% becomes a chip shot and a drawdown in that kind of situation. So,
Yeah.
I'm back in the same camp with everybody else. We just don't know what's going to happen.
Yeah.
But the bad things are out there, they're visible, and they're really, really bad.
And consumer confidence can't be aided by the prices. Norm, I'm going to ask you a quick question. How do you think this U.S. dollar is going to go? Because it had a nice big run up to 110 on the Dixie. And then I thought once it broke under 108.50, that was the end of that game. Now it's down in this, I don't know where it is, but is it near a low between 98 and 100, or is it going to bounce, or what are you thinking?
I think, like Harry says, I let the market tell me where it's going. But I would, there's a lot of, today was really I wrote a piece today about the baby with the bathwater today. You had a lot of counter markets that weren't the mode of safety that you would think didn't really perform. You had the Bitcoin, which is kind of the latest hold of safety. They had the gold was down $30 today. All of these selling, all the selling that were going on with the commodities and the indexes that tend to offset or be a safe haven for what we saw with the general equities. They didn't perform today because, of course, when you get extreme movements like this, you've got to sell the good with the bad so that you can cover margin calls and so on. And then you have the cascading of all the algos that were going on. But, this is the kind of environment where, as a day trader, I look at the daily and the longer term charts as kind of an undertow for what's going on because I'm out of everything at the end of the day. I'm looking at I consider the undertow as a preferred direction in my trading. Not I don't for instance, tomorrow I may take a long trade because my short-term indicators are telling me to take a trade in the short term may go against that undertow. I use the undertow for position sizing. When I see a market going with the undertow, that I may put on some extra strength on a position. So I'm going to have to wait until the market shakes out a little bit this week before I can, hold any kind of a long-term opinion. But I do think that the low that's created this week is going to be a critical point at which, this undertow will start to affect everything going forward. So but as far as the dollar is concerned, I would think that that we should see a higher dollar in this extraordinary situation. But I'm a guy that actually likes the Japanese yen as a hedge going long against some of these falling apart markets. So that's kind of how I see it in general.
Harry, on the biotech area, what are you seeing as far as some good opportunities? Because I know you follow those very closely.
I do, and you know, one of the things I always follow, because I follow three distinct groups that I think lead the market. Three: semiconductors, financials, and biotech. The vast majority of portfolios for major institutions have the best companies in those groups in their portfolios. You look at the semiconductor; it's at the July-August lows, okay, and but it's below the moving averages, and it's in a critical state. If you look at the semiconductors, I mean the financials, they were in great shape until the last couple of weeks. Take a look at the FAS. Look at that break. Now they were actually at one point, when before that reversal day, it made a new all-time high just about 6, 7 sessions ago, and it's dropped from 189 or 90 down to 142 in about a week plus on big volume. But it's at the 200-day, it's at the prior low. There's support here. Now, even if we go lower, I have the opinion that these groups are going to lead the way up and down, and that they're oversold short term. So there's trades to be made as early as tomorrow morning, in my opinion, in these three groups. But if you look at biotech, go to LABU or XBI, one of those two. LABU, yeah. That's been down. You'll see this has been leading the way down all the way. It broke in November. It rallied back to the moving averages and failed, and stair stepped its way lower. It's had a 5-wave Elliott wave decline. I think it's oversold enough to rally, but it doesn't look like a bottom to me. And gentlemen, I want to point out one other thing. I follow intraday intensity because major important lows come with that kind of intensity. When I see a 1,1500 negative tick, when I see the VIX, like we started out with the conversation, in the 30s, 40s, and even higher, back in 2000, I think the VIX hit 84. Okay, it's possible. We're nowhere near those levels. Now, on a short-term basis, are we oversold? Yes. Do I think we bounce? Yes. Do I think that next bounce is going to tell me where the market's going? My good friend Avi Gilbert of Elliott Wave Trader, who's is a real good Elliott Wave guy, thinks we may make a new high before we get an important all-time high, and then he thinks the market's going to a major bear market, like John does. And I don't disagree with that. But like I said, I'm a much shorter-term trader, so I go with the short-term technicals tell me. And right now, the short-term technicals are oversold, but not with an intensity that tells me this is important major low. I believe this is leg one of an important bear phase.
John?
Yes, sir.
No, I'm saying, did you have a comment or something? I thought I heard you talking.
No, I'm just not used to being called a bear. That's all.
I told you, you're the biggest bull of the 20th century. That's a pretty good title.
It's like I got promoted in the Marine Corps. I suddenly went from being captain to major, but I only answered to captain. I wasn't used to the new name. No, you know, me, the eternal optimist, I'm looking forward to the levels that the big, the market leaders, the financials, the techs, and the biotechs will eventually get to. And you're looking at like down half on all of these names. If you missed NVIDIA last time, you're getting another shot to buy it again, at 75 or 80. Tesla, you're going to get a chance to buy it down 80%. You're going to get a chance to buy it at 140, which, believe it or not, was last summer's low. I've been trading Tesla ever since they went public. Always goes up more than you expect and down more than you expect, and it's in the process of doing that now. And Tesla shorts have been one of our most aggressive positions, really, since the beginning of the year.
Pretty oversold in the short term, though.
What's that?
It's pretty oversold short term.
Oh, yeah.
Everything and his mother is oversold short term.
Yeah. Yeah.
And remember, we're all trading against the tweet that the trade war is over and we won. And that could generate a 1,000-point rally in the Dow.
Yep.
So until then, even your shorts are high risk here.
Now, John, a quick question. It seems to be that Besant might actually be convincing Trump that in order to get the 10-year under 4%, you've got to get a slowdown in the economy, and you have to let the stock market go down. And that's why I think Trump turned from, superlatives on everything, every subject, to sanguine on that Bartiromo interview, because I think he's been convinced by Besant that to get the interest rate down, which would help obviously the real estate, and it would help the credit card people, and it would help a lot of people, getting the rate down. And in order to do that and to get oil down, you're going to have to bite the bullet on the economy slowing down a little bit, and also for the stock market to maybe go back to 4,800. But again, he keeps thinking it's definitely short term. So that, I think that's what he's holding on to. How do you feel about that, John?
Well, there's a couple of problems with that theory. First of all, he didn't campaign on the pain and suffering and bear market last year. So a lot of people are going to be really upset by that he did a bait and switch on economic policy. But then you have to ask the question, um, if he does, the only way to get interest rates down is to cause a recession.
Right.
If he causes a recession, can he get out of it while making dramatic cuts in government spending? If he does, it'll be the first time in human history that's happening. Uh, if he can't, we're in the Great Depression, or we're in a recession that goes on for years. So, you tell me what's going to happen. He's either going to have to cancel his spending cuts to revive the economy, become a Keynesian again, or face the consequences of causing the next Great Depression. And the timing for we historians, the timing is really fortuitous because, Herbert Hoover got elected in 1929. 8 months later, the stock market crashed, and we had 4 years of Herbert Hoover and Great Depression until a new president came in. We may be facing that this time too.
Well, at least we got the Hoover Dam.
The name has been changed.
Oh, has it?
Oh yeah,
Mount Rushmore too.
It's Boulder Dam now.
Oh, it's a Boulder Dam. Okay.
Yeah, one of the last Democratic presidents changed the name back to Boulder.
Oh, I got you. Yeah.
See,
All right.
Republicans aren't the only ones who change names.
Yeah, it'll be interesting. Norm, you were saying a little bit about the gold. I mean, the gold is hanging in there. I mean, it's 28.90. It's not collapsing. It's not going up anymore. It looks like 29.75 could have been the high point. But what do you think of gold?
Well, I think, if some of these lower predictions pan out, which are probably in the likely, again, this week to me is a very important week. Because we've seen horrible things happen only to see the markets bounce right back. But I just don't think that earnings and some of the things that we're seeing are going to result in that. But we'll have to see. I've been wrong before. But I mean, if you look at this chart, you're looking at more of a topping kind of we're flattening out a little bit on the 50 and. Again, I see sideways action here until there's a resolution of direction. But the more dramatic this move down is going to be, the more you'll probably see some selling in gold to offset the highs that could have been made. As you're selling gold to cover margin calls and so on in the other investments, but which is going to there's offsetting factors. You've got it's a realm of safety, and you're going to see some selling to cover some of the horrible things that are happening. So that sideways movement is I would expect to continue here. We're starting to kind of see it. There's kind of a weak double top here. I don't see an RSI. Is that the RSI on the top? Again, at the midpoint, we're not getting much of a definition here. So I would say sideways. But I've always been a fan of taking a look at the gold-silver ratio at times like this. I think that, if you're dealing with the metals, that may be a place to take a look. I remember years ago, it used to be 50 to 1. Now the real ratio is about 60 or 65 to 1. But we've been playing up in the high 80s, mid 80s, and even 90 plus. So I do see chances to see that that ratio come together by buying silver against gold, as a possible play during this time. But again, as far as gold is concerned, I see the sideways movement because of offsetting factors. Liquidation to cover the horrible stuff that's happening, and the store of value. So now listen, if the gold stays the way it is, it's going to look pretty good as everything else is declining. If I'm right about that sideways movement, so we'll have to see.
Yeah. Harry, do you watch this stock called Intracellular Therapies? It looked like it had a pretty sharp move today.
You're talking about ITCI, right?
That's what I'm talking about.
Yeah, I know it very well. It's a matter of fact, I'm pretty familiar with some of their drugs, but isn't that a takeover?
I think it must have been because it's got a big move today and then a flat
No,
line.
that was, I don't know what that is, but maybe the merger's not complete, but that was an acquisition. You don't see that kind of chart unless you see a spike based on a takeover price, and then it moves sideways until the deal's consummated. So if you look on the news, you'll probably see that was a takeover.
Do you keep an eye on these inexpensive ones like Heron Therapeutics or Sana Biotech?
Look, if its stock looks bullish to me, I don't care if it's 5 or 105.
Yeah. I just was wondering if those are in your radar, because I know you keep a little bit of a list there you keep an eye on too.
Well, there was two, like I said, there were two we traded today. Look at PGTX today. Maybe it's PTGX. I'm sorry. That's it. See that spike?
Yeah.
Very positive drug news, and they gapped it. Now we bought the opening gap right on the first pullback in the 49.5, I think it was, and went to 58. And that's the kind of stuff we do. Take a look. See that little first pullback, the 2 bars off the high there?
Mm-hmm.
As soon as it stabilized and started to move up, we bought it under 50. And same thing with I think it was T. I forgot the other one, but the bottom line, they were every day this trades. That symbol was MYLS. Take a look at that.
Right.
Is that correct? This is Lowe's S&P 500 Healthcare, MYLS.
Yeah, that's it. It's not coming up, right? There it is.
No, it's
What's the name of it?
Oh, I'm sorry. MLYS. Did it again.
MLY.
Dyslexia.
Oh, MYLS. Didn't he say MYLS?
MLYS.
MLYS.
Minerals. Therapeutics.
Okay.
Yes, yeah. That's a daily chart? No, it's an intraday chart.
Yeah.
Right. Well, take a look at the pre-market pop and flag that was created down there, 11.5, and it ran to 18. That's the kind of day trading we do at our site. But from the standpoint of biotechs, obviously they're the kind of stocks where they'll gap. We saw one last week go from 42 to 14 in one day. If they get a FDA bad news out of a trial or something, that's just, you can't put a lot of money into these stocks because they are extremely risky. Only the Amgens and the Bristol Myers and those kind of companies are the ones that I'm interested in.
Even Novo got hit pretty good, didn't it?
Right, exactly. So
what about this Organ Genesis, ORGO? That did pretty good, and then it pulled back a little bit here. Do you follow that one at all? ORGO? It's kind of inexpensive.
Yeah, I did. As a matter of fact, it's a tech trader swing. I bought that first pullback and it bounced, but then it's pulled back again. We have a stop right here. This gets under 5 and it's right here at 514. It's liable to be 4 or even less again. It's got to hold this, what I call bull wedge, because when a stock breaks out like that with a major spike up on huge volume, I mean, we had 58 million shares, which is, they don't even trade that in a month. They traded that in a few hours a week ago, and then it formed a little wedge here. See it? Now, if the market was cooperating or the stock in itself had some additional news, this went from 3 to 671 in a couple days. That measured move tells me another 371 may be coming. If it's a perfect measured move, it brings us to about 8 3/4. That's my next target. Targets are 6 3/4 and 8 3/4 technically. But I also have a tight stop right here because you can't afford to watch any biotech stock break down in a falling market. it could just fall
No,
apart.
it can fall like a thing. Hey, John, I got a question for you. You're a worldly man, and when I was doing some homework a few months back, I noticed Europe. Larry Fink said too much gloom over there, and China looked like pretty cheap deals, and they were. Now we've got China with a deflation just announced, and also we've got a big budget deficit, 30-year high, and we've got the enthusiasm and the bunds going crazy in Germany, but they haven't passed anything yet. So, do you think that the China trade and the Europe trade is seen its day for temporary time, or what do you think?
I wouldn't touch China. I'm not going to go in there until they get a new leader. Just too much political risk and tons of insider trading. I mean, the foreigners are always the last to find out what's going on in China. Germany's a different story. Just as we're cutting our defense spending by half, they're increasing theirs. So what that does is it transfers the monetary stimulus from the United States to Germany with the same consequences for the stock market. And I don't see that ending anytime soon. I think that it's not just Germany, but all of Europe is going to be ramping up their deficit spending, uh, for the next several years, and could get a bull market in Europe. Europe also has the additional advantage in that these are extraordinarily cheap stocks. A lot of them are single digits. They're just as cheap as Chinese stocks. So you could get some sustainability in Europe. Uh, and of course, one of the reasons Germany is able to deficit spend now is their national debt is only $3 trillion. Ours is 36 trillion and climbing, so they have all the room in the world to keep on borrowing and spending to defend themselves against the Russians.
And you think the guy they picked up in Canada was a pretty good guy, don't you think, Carney?
Well, the leader of two central banks, how are you going to
Right.
do better than that when it comes to monetary policy?
It's better than
So,
a kid who looks like he's still in high school running the country.
exactly. So
Uh,
I thought that was a great choice,
yeah.
and I imagine that with his one-on-one meetings and lessons, he's going to be giving lessons in basic economics.
And Trump won't be calling him governor anything.
Uh, yeah, exactly,
A little respect wouldn't kill anybody up there, right?
exactly.
Yeah. Um, Norm, a quick question on crude. Are you following crude at all? And it's under $70, which makes me concerned. Under 60, I think it goes into the abyss. What do you say?
Well, I'm not. I do follow crude from the standpoint that I always have. I'm a commodities guy, so I always have seven different charts up. One of those is the crude market, because I generally crude moves very quickly. In the way I trade, and I try to develop triggers that give me a pop. In other words, enough to take a quick scalp, and so I'm always putting on a combination, at least two positions in every trade that I make. One and half of that is usually a scalp, and the other half is what I call a runner. So if the scalp, if the pop that happens with the trigger continues, and say stays above an eight bar EMA, you can get a nice run out of it, because traders are always, they're not looking for, you get a lot of scalping traders. I've never been a pure scalper, but in this kind of a market where it's excitable, I like that kind of approach. So back to crude. Crude is a market that can really run. It can run $1 or $1.50 in a matter of minutes. So when I get my my trigger to give me the signal, when it happens, I'll take that quick pop, but that runner has a very good opportunity. So I do like trading them as far as its direction right now. The market is down right now. But again, I'm a day trader, and I watch. I do think that we should probably see continued pressure. We'll probably see somewhere in that 55-60 area. As everybody talks $50, it usually doesn't quite get there with crude. I think there's a little bit of downside left, but from a day trading standpoint, that I really like it because of those reasons in an exciting market.
You want to share your chart for a second? And I know you have a certain way you analyze the setups on the candlesticks. Do you want to share your chart and
Sure.
just,
Let me.
yeah, and give an example so people know, your methodology a little bit and how you teach with them and help them learn and what you're seeing is like
Okay.
that trigger stuff. You know what I mean?
Okay. Can you see my screen now? Yeah, it looks like you can. This is kind of this is what I'm looking at on a daily basis. This is the Japanese yen. Here's the crude oil right here. And I look for a particular trigger. This is the 15-minute. I usually trade off the 5, and as I get a profit, I reduce it to as I get a runner. This right here, this actually is the 8, and this is the 34, but I trade off the 8. The 34 keeps me in trades that I normally would get shaken out of, or it prevents me from getting into trades that I like it at my back. This is what I call a loaded gun trigger, where you have one or two of these dojis or lack of direction spinners type things, and then a dramatic, a strong move. The stronger the better through the 8. When this happens, this is in fact the stronger the move, the bar, the what I call the extension bar. It's the more dramatic the move. I don't fear these long bars. I like them in this formation, and it looks kind of like the handle of the trigger would be here in the barrel of the gun. That's why I call it loaded gun. But look what happened here, and look how it hugs nicely the 8. So there's a certain measure that we take on this bar, and I take my scalp on a certain percentage of that as I extend it down. So pretty quickly getting my scalp, and then I move my break even down to usually the entrance point or somewhere near there, depending on where the 8 is. But you can see how well the market. I look for a couple of closes above the 8 in order to get out. You have a couple of closes here, but no follow through. Again, when I'm as long as I'm staying under the 34, I kind of like that. So here is this is a nice move right here. The only other time, this is another formation I like when you see an engulfing pattern when it's as complete as it possibly can. A continuation here is really, these are high probability moves too. So, I like the pop, and this is the crude oil, but here, look what happens, once you get that pop, you can really get a lot of run from it. But once I get down once a market extends, I'll go to the 2 and defend at that point. And I may have been out right here in this mess by defending, usually go a couple of bars back. But I would have been right. Here's another loaded gun signal right here where you have, it's okay that the spinner is right over the 8, as long as it's at least on one side. I like the separation. Once it goes through the 8, here it is again. Now I wouldn't have asked much from the scalp here because of this right here, but I would have taken my scalp right here and continued on. So this would have been a nice market to trade. But I think if later on maybe I can show a Japanese yen. I'll show it right now because there's a lot of.
While you have it up, you might as well hit it. Yeah.
Yeah. Let's see. The Japanese yen is something. If you look at this is the movement. That's it. This is the movement in today in the stock market. You can see we have an opposing movement in the Japanese yen, and I really like. So many traders, you wake up in the morning, the move's already happened. You say you're right in the middle of a trend. Sometimes you don't want to take on a big position, but what happens, here's a continuation pattern. Here's that loaded gun trigger again that makes it. Here's a one that was a little messier, but the idea here is that this was the action today in the stock market, as this is the daily. As the stock market's been going down, Japanese yen has been showing strength. So I like to look at, and I like the Japanese yen because it's as opposed even to the euro dollar, which tends to go with the stock indexes. You can see that it's a much lower basis, so that you can take on more contracts and be scaling in and out, which I really like. I like to preserve along the way. So I did want to show those that are a little fearful about getting in, traders into the S&P and the Nasdaq. You may want to look at some opposing moves in the Japanese yen to slow things down, but still take advantage of a direction that's usually defined in 80-90% of the time by what's happening in the in the stock indexes. So I wanted to make sure I did see that.
Sure. Harry, could you want to share your screen? Because your screen is very involved, let's call it, because you have quite a number of stocks and a bunch of indicators, and you're watching the volume and many, many things. Can you show your screen and discuss your methodology a little bit?
I can, except that I can't see with the shares. My bar is covering where it says share. I'm having a problem with that.
Oh.
I'm not able to share it
Well,
based
then
on.
maybe you could just discuss, how you follow these things and what are the things you follow. Because I know there's a certain things you follow on each stock, and it's unique to yourself. So what is
Well,
yeah.
here's the bottom line. Like I said, and same as Norm, I'm an active day trader. The people in my room are phenomenal in terms of coming up with ideas that I've never seen. Now, it's a place to be because we have hundreds of people, even thousands at sometimes, that are watching me and contributing. So what I do is I take their ideas and my ideas, and I'll look at the 1 minute charts. That's what I trade, 1 minute. I believe that intraday trading should be done on 1 minute charts. Of course, I'll look at 5 and 15 minutes to see what the current trend in the last 2-3 weeks has been, and whether it's breaking out over certain areas or not. Like today, for example, when we talked about those biotechs, MLYS opened with a bang, and immediately pulled back and formed a little falling wedge, and then we went long when it turned around. If you look at that 1 minute chart, you'll see it. The same thing with that with the PTGX, and there were several others that we traded today that did very well, and in a lousy market. But more importantly, we traded the ultra shorts today because I really felt the market was in a hole today, looking like it was going lower. Look at the SOSX. That's the semiconductor triple bear. We trade that nearly every day in my room. This morning, the market opened. It took a little dip and then ripped. And as soon as it broke out over 25.80, we went long. And I got everybody out on the spike up after 3 p.m. when it reached 28 and a quarter. It's a nice 2.5 point day trade. About 8 or 9%. We'll take that every day, right? Same thing with UVXY. This thing broke out in the morning and then backed and filled a bit. And after that, formed the triple top around 1:30. I gave a buy signal at 26.70, and by 3:10 or so, it was 28.33 for $1.50. So that's the kind of trading we do at TechTrader.com. I believe in keep it simple. I have only a couple moving averages. I believe in 3 in particular: 10, 21, and 50 period moving averages, even on 1 minute charts. I also believe that the same patterns form on all time frames. You can see the same flags, coils, pennants, intraday, a 5 to 15 minute chart, daily charts, even weekly charts. And so back in 2000, when the market crashed, I decided to move away from the daily charts and move more intraday and be in cash every night because of the treacherousness of what the 2000 bear market was like. And it turned out to be a big aha. I even talked to Ralph Acampora, one of the traders,
Right.
Trader Expos, and he said to me when I showed him what I do with 1 minute charts, I blew his mind. He said, I didn't think that you could trade 1 minute charts intraday, but obviously you can. And I've been doing it for 40 years now.
I thought I was too old for the 1 minute chart. I'm not fast enough, but you seem to have a methodology that works.
Yep.
The main idea is you want to keep things on a short leash, right?
I do, and I have in my room when I put a buy signal, a buy alert, I put buy alerts out. I tell them what the first and second targets are, and I always tell them where the stop is and where support and resistance is. And I do webinars all day. I'm online. I come back every 45 minutes to an hour and do another update, show them where the chart progress has been, what it looks like, whether it's trending, whether it's broken down, whether we stopped out, and whether if a stock is running, there's no reason to sell it until it breaks support or until it reaches the target. So I keep telling raise your stop to here, raise your stop to there, keep raising your stop until the stock is either stopped out or we decide we've had enough or it reached a couple of our targets. That's how you day trade. And also, one of the big mistakes people make is they make a decision to sell, they sell everything. My opinion is sell it in pieces and tranches. If a stock goes up, sell a third or a quarter or half of your position when it reaches your first target, and then raise your stop. If it keeps going up to the next target, continue to raise your stop, but exit another third to a quarter or a half, depending on what your trading skills and adeptness is. But I think the biggest mistake traders make, number one mistake I hear all the time from traders, how do I stay in a trade? I always sell too early. I hear that all the time.
Oh yeah,
It's because they're afraid of losing their profit.
yeah.
And so when they see a stock back off a couple bars, they dump it. Next thing you know, it turns right around and keeps going. That's because it didn't break support or the trend line or the moving averages. So all it was doing was an intraday retest or consolidation. And that's what people don't realize when it comes to stocks. Nothing goes straight up in a line. It's got to back and fill and create some continuation patterns.
Yeah, with options, obviously you have to be worried about the time factor all the time. You're dealing in actual stock, so the time factor is not that much of an issue,
Yeah, actually, it's not an issue at all.
right? John, you have your own methodology. It always sounded to me like it was a combination of fundamental and technical, but do you want to share a little bit of your insights?
Yeah, it really is that. I use technicals for my short-term market timing on entries and exits because on a short-term basis, the markets are driven by day traders and technical traders. On the long term, it's all about the fundamentals. Work in, money out. The more time you devote to studying the fundamentals of the companies which you own, which is easy to do these days because everything is on the internet,
Right.
the more money you get back. A lot of people come to the stock market because they think it's easy money. You buy something, watch it go up. It's not. It's the hardest money you've ever earned in your life. But it will pay you. It will reward you if you put the time and effort in.
Right. It's about the time where I'd like everyone to know how to get a hold of you guys and what special offers you might have. So let's start with Norm. Norm, explain how people can get a hold of you, and of course, if you have any special offers.
Well, the best way to get a hold of me right now is to email me. You can look at theirmoneyyourprofit.com as I've been focusing on helping traders navigate the very tight risk management aspects of prop trading. But get a hold of me. I just made an offer today that where I'm asking traders to give a kind of a down payment on my system and pay the majority of the investment with their profit. I haven't seen anybody do that. I'm confident enough that you can understand my simple trading plan, loaded gun, and do it. So if you just email me at admin@thedisciplinetrader.com, admin, if it may go to Suzanne, or right now it would go directly to me, but admin@thedisciplinetrader.com. I'll send you a replay of my presentation. It was a short presentation today, less than a half hour. But I haven't seen anybody that would do that. But that's the kind of confidence I have in simple trading plans. And I think Harry is on Mount Rushmore when it comes to keeping things simple. And I think that's when you start to have you start to have too many hurdles to jump. By that time, a lot of the movement is gone. So simplicity without duplication is really the way to go, and that's what the simple trading plan loaded gun is all about. So email me at admin@thedisciplinetrader.com. I'll send you the replay of this. Pay a little now and pay the rest through profit.
Sounds great. Hey, Harry, again, could you explain about what you do and also your trading room and how people can get a hold of you?
Yeah, of course. Well, we're by the way, just a little insight. The techtrader.com, that's the TECH trader, the techtrader.com, has been around since 2001, and we're considered one of the first 3 or 4 rooms ever to be on the internet in terms of trading rooms. So it's very seasoned traders. I have people with me, believe it or not, since 2001, 2002, and they're still with me over 20 some odd years of trading in our room, and very successful people as well. But the way to reach me, just if you wanted to contact me with some questions, send an email to support@thetechtrader.com. And if you want to take a look at a 2-week free trial, go to thetechtrader.com, and when you get to the main window, you'll see where it says sign up for a free trial, and no credit card necessary. Just put your name in and your information, and come join us for a couple of weeks and enjoy the ride.
Sounds like a great opportunity. And John, yourself, again, how can people get a hold of you, and what are you now offering?
Well, you can find us at madhedge.com. We have a 3-day summit this week. with 24 speakers on all trading topics. I'll be speaking along with a lot of other professionals, and the sign up is free. Just go to madhedge.com, register, and sit back and enjoy it.
Yeah, sounds like a lot of different type of traders.
And we have everything all the time, every
Right.
possible trading strategy that's out there, and people love every minute of it, and it's very, very educational.
Yeah. And with regards to, when you have your advisory service, is it only stocks, or is there different ones like stocks or commodities, or how does
We
that work?
cover all asset classes, long, short, all the time. So, if oil's going down, we're short oil. If the yen is going up, we're long yen. We do a lot of bond trading every year. We just clocked a big profit on a bond long last week, and we do tons in stocks. We buy the ones that are going up and sell the ones that are going down. It's my new investment strategy. I'm thinking of patenting it. It's called buy low and sell high.
And you're bouncing around from asset class to asset class, kind of like looking for
I
the gold,
go with the
looking for the
lowest
gold.
rank.
Yeah,
I go where the low hanging fruit is all the time, and there's always low hanging fruit somewhere.
yeah,
I,
that's great.
I I have listen. I have a different philosophy. You know what Jesse Livermore said back in the 20s, right? Buy high and sell higher,
Yeah,
because he believes that when stocks are breaking out to new all-time highs above resistance, there's no overhang, there's nobody looking to get even. That's when the stock can really fly because it's blue sky, so to speak. So my philosophy is I look for stocks that in this market, for example, there was something like 30 or 25 new highs in a market like this today.
yeah,
Those are the stocks you should be watching, because
yeah.
when the market, and if the market does turn, or even if it's just for a week or 10 days, those are the kind of stocks that just keep going.
Yeah, and Jesse Livermore's other famous quote: "I'm paying my bill tomorrow morning." He committed suicide in a hotel in New York.
Well, he's a smart guy that way.
Yeah.
Stanley Druckenmiller, a very famous investor, said that George Soros's philosophy was exactly what you guys are mentioning. In that, he always believed you'd put on a position, and then when it goes up, you double it and double it and double it. So he was I guess you'd call that a bet presser, right? Pressing your bet.
Yeah.
And
Well,
and the guy
George
obviously
Soros,
makes, yeah.
George Soros was a client of mine at Morgan Stanley for 10 years, and an investor of mine in my first hedge fund. And I went to him once with an idea. I told him, I said, "How much would you put into that?" And I said, "Oh, maybe 5% of your money." And he says, "Get out of here. I'm only interested if you want to have a stock idea where I should put 50% of my money in it or more."
Right, right. That's what he told Druckenmiller. He said, "How short are you or long short you are the pound?" He said, 200%. He goes, "Why not 500%?"
You can actually go to 1,000% in the currency market.
Uh,
Right.
anyway, with just want to throw this one in before we close it out. Option Professor me is going to have a webinar on Thursday, and we're going to cover three things. With the market tanking like this, we're going to go over what opportunities are out there right now that you should keep an eye on, and how to manage the risk that we're involved in. Second thing is we have this NVIDIA conference next week, and I think there could be some big announcements on quantum computing. So I'm going to be going over some stocks that might be interesting in that area. And finally, we're going to wrap it up with alternative investments and take a look at gold, Bitcoin, and in the international markets. So that's happening on this Thursday. And if you'd like a link, very simple, you could just go to optionprofessor.com and put in your information, and I'll make sure the link gets over to you. That's going to be happening this Thursday. And with the markets where they are and the NVIDIA conference coming up, I hope it to be a very exciting meeting. So try to make a note of that. I wanted to thank everyone, Norman for being here, Harry for being here, and John. I think we gave out some great information, and clearly get a hold of these guys so that you can find out exactly how they can help you. That's the whole idea of these things, is to get a hold of us and let us show you how we help people, do whatever you want to do. So I appreciate you guys all being here on this big day here. And we'll talk again, of course. Right now, I'm going to send it back to David. Thanks a lot, everybody, for being here.
Thank you.
All right. Yeah. Thanks, guys. Great discussion. Thank you for being here. So, just a quick reminder for everyone listening, be sure to subscribe to Timing Research on YouTube. Also, if you search for Timing Research on Substack or your favorite podcast app, you can find the links to the recordings there as well. Or you can just go straight to TimingResearch.com, and the full 10 plus year history of all Timing Research shows and events are permanently archived on the site and on YouTube. So I just want to thank my guests again for today. We had a great panel. So Norman Hallett of thedisciplinedtrader.com, Harry Boxer of thetechtrader.com, John Thomas of madhedgefundtrader.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you,
Thanks, David.
Thank you.